All right, so I just wanted to do a quick update. This update is going to include pretty much the invalidation points for crypto and most likely the market if we're going to have this rally over the next, 4 to 6 weeks. And then I'm going to cover China stocks and Tesla and just kind of give uh, my overview of what I'm kind of looking at right now. And I'm also might go over XRP if I have enough time. So first and foremost, let's just look at crypto. Uh, my basis and thesis for crypto includes Bitcoin, Riot, Mara, and CLSK. And I'll start with the miners first, and then I'll go to Bitcoin. But let's just look at Riot. All right. So Elliott wave theory says impulse moves for uptrends for bull markets go in waves of five. 1, 2, 1, 2, 3, 4, 5. Right. And then there's an ABC correction for wave two, and then there'll be another impulse five, and then ABC correction, and then another impulse five for wave five. So I can see 5 waves here. Absolutely. Right. The question is, it has been, is this an ABC? And then this is wave three. And then we're doing like a 1, 2, right? And then that's wave 1 and 2 of wave three. And now this is wave three, and we need to go from here. And if this is wave three, then this is wave 1 and 2 of three. What would invalidate that is if we start breaking under this 960, which is the level that I gave everyone for an invalidation level, right? For the bull thesis for Riot, we cannot get under 960. If we do, this is not a wave 1 and 2. And this is more than likely an A, B, C correction. And then this is in wave C, this is A, B, C. So unfortunately, it would, well, let's not do that just because it's going to be hard to see it all. Uh, Unfortunately, we're in the middle where it's not confirmed and all we have is risk to reward. So fortunately enough, we're like right there, right? We're kind of, well, about 9% away from the invalidation point. And that's what I was warning about up here. A couple of days ago, I'm like, hey, listen, you don't want to go deep up here because the invalidation point is so far away, 25%. Luckily, we trimmed everything and then the sell-off happened. Now, things that I don't like about this is this purple line you can see was evidently the trend and has been the trend since October. We bounced off here twice, bounced off here, a little bit of a bounce here, even bounced here in March, beginning of March. And now what we have is a break under it, which is why I mentioned if we break under that 1033, which is the low here in pre-market, then that's going to even give more confluence or a contribution to the bearish thesis, where we, sell off deeply and then rally in the end of the year. So that's the purple line for us. And then something else I don't like about Riot is the fact that we're under all the moving averages on the daily now. So what this is saying is, the 20, 50, 100, 200, and 325 over every single one of those periods of days. Now price action is starting to print over under the average price for those days. That's not good. So what I'm looking at is to get a pretty quick resolution here, and we need to get it ASAP. And if we can get that resolution, then the move to the upside should be strong as fuck. Because if this is wave one and this is wave two and this is wave three, then this is going to be wave three. What's going to be starting would be wave three of three, which is extremely strong and impulsive. I would assume realistically it could be over 100% move. But we have this risk here. And it's cumulatively, if all of those stops trigger, then I'm going to be pretty convinced that we're not getting a mid-year rally and it's going to be ugly until probably like September, October type thing, but we'll have to see. So this is Riot. Our invalidation point for Riot, the true invalidation, is a daily close under 960. I would really like to not get under 1035. That would bring me a little bit of comfort as long as we stay above that. But if we start getting under 1035, I would start to be concerned that we're going to get to this 960. Something else to kind of look at, and that's pretty much what I was drawing for you guys today, where I was mapping it out, saying that. And this is the larger view for the bullish thesis if it were to play out, right? If this is wave three, then the next target could be $23 from 1060. So 120, 130% move could be amazing. Something that's bullish is this is all-time low ascending support, this red line, and this is all-time high descending resistance. And initially we had that respect on both of those, which is what I was pointing out a couple weeks ago, which caused this rally. But as of this point, we really need to get back above all this price action. Let's go to Mora. Our invalidation point for Mora is 1450, and unfortunately it's quite a far ways away because same thing applies, right? I can see a 1, 2, 3, 4, 5, which is wave 1, and then this, wave 2, and then 3, 4, 5. That would be the bearish thesis, right? This is a 1, 2, 3, 4, 5. That's extremely bearish because that means we're going to correct about 61%, which could be, the $10 range. Now, the things I'm looking at to confirm or deny this is the baseline is 1450. If we print under that, I think that is the case, and we're going to $10. As long as we stay above that, we have some other things that we can look at. First and foremost, MAR is actually above all the moving averages, and right now it's riding this blue line, which is the 100-day moving average. So it's already supported this as a trend once. And currently, where are we bouncing? Right here, right? So we're bouncing off the 100-day moving average today. That's not saying that it can't break through tomorrow or a couple days after, but at this very moment, this is giving validity to this blue line. Now, where are we at? We're at the bottom of the nibble zone buy, right? So that's something else that's bullish going for us. As long as we can stay above this, then it's kind of respecting my levels. Something else I would like to see is RSI. It looks like it's starting to coil in an ascending wedge, right? I think whichever way it breaks out is going to kind of give us the sign of the true move. About the same thing with the ADL line. We made lower price, but right now it's higher, so that's kind of bullish, but I would really not like to get under this, which is exactly what this says. Lower low ADL break. So we got Riot at 960, Mora at 1450, and we just have to be mindful that 1450 is still 27% away. So that's why I called this a nibble buy, right? It's like we can't go heavy here when the risk is 27%. Now I would, buy a little bit more in here if that was the case, because then, if we say we buy at 1550, the risk is 6%, right? And if the risk is 6%, then we can see the upside of this. So the question is this a 1, 2, 3, 4, 5, or is this a 1, 2, and then this is the extended wave 3. So this would be a 1, 2, and then 1, 2. So this is 1, 2 for wave 3, and now we have a wave 3, which is the extended wave. Then we'd have a 1, 2, and then it would be like a 3, 4, 5 up here for wave 3, which is about what it would look like right here. Okay, which could take us up to the 40s, 50s. Now let's look at CLSK. I think CLSK might be the first one to really give us a sign if it's going to happen, right? I wrote here that there's 2 levels that can happen, 2 ways this can happen, the purple path or the red path, right? Do we come down here and then rally through this white path, which takes us to wave 3 of purple, which could be a high of 33. We're currently at $16, that's a 100% rally. Or do we kind of even get some kind of rally up here, stall out and supply, and then make a lower low? And that's what I wrote here, right? Continued rally buy zone. If price prints under 1475, that creates a new pivot low, and the extended third wave is complete, taking us to the next buy zone for a later in the year rally. I really believe that this 1475, this 1450 area is key. I think if we get a daily close under that, that's also going to invalidate the mid-year bull thesis. So we have 3 invalidation levels that are very important to us. We have CLSK at 1475, we have MAR at 1450, and we have Riot at 960. So if all of these were to hit, I would be so bearish it would be funny, because it's like it's all of these accumulatively are telling us that the theme is bearish. The rally's over, at least until the end of the year. Same thing with Bitcoin, right? I believe our wave 4 validation point is 59,800. So as long as we don't have a daily close under this, we should see a higher high. The question is, was this a truncated fifth? Because I can count 5 waves in there. From Friday, I even warned of that. I said 1, 2, 3, 4, 5. And in this little area right here, that can be truncated, which means it just didn't, there was so much sell pressure, it didn't get extended at all. But if you can see 1, 2, 3, 4, 5. So I can see 5 waves in that, which is concerning. But, with this being wave 5, it could also, that could just be wave 1, or it can be a deep retraced ending diagonal. Either way, uh, I initially called this weekend when we had this massive sell-off, and that weekend when I first made the Patreon, the the first literally 24 hours, those people got really good entries because everything was so low on this dip. When I called the bottom here, it was between 60 and 62,000, and I said the risk was 59.8, right? So 62,000, 59.8 was only 3.5% risk, and if anyone even took the Bitcoin trade, it gave us 16%. I personally did not. I don't trade Bitcoin specifically, but I usually trade the sympathy plays. So that's what we're looking at right now. Is this a wave 5, and then we're getting like an ABC correction on the lower time frame, right? Maybe like an ABC. If that was the case, I would really like to see a bottom here around the 65,000, which is what I warned this morning. This is the 61% retracement of this entire move, right? So bottom to the top, and that's where wave 2 would end and wave 3 should start. So if this was going to be the case for a bullish thesis, I would like to see it happen something like this, right? And then take us about 80K. That's what I would really like to see, and if it's going to happen, it really kind of needs to happen here, in this area. We broke down below this current demand, so it's no longer valid. And then we only have this demand zone. But really the thesis here is I'm bullish above 59.8. The thing is, even though I'm bullish above 59.8, the risk is 8.5% drawdown. So even though I'm bullish up here, it's not where you want to go heavy, right? If we were to break above this, then I would be a lot more confident, especially if we start making higher highs in the miners. But as long as Bitcoin's in between this range, there is a risk of a lower high here, lower high, right? And it not being a 5-wave structure, and we doing more so kind of like this, which could take us down to 50, 53,000. So that's the risk factor here. The main level that matters is 59.8. So now we have four invalidation levels for crypto. I think these invalidation levels are truly the line in the sand for the bull thesis for crypto. And it's Bitcoin at 59.8, Riot at 960, MAR at 1450, and CLSK at 1475. As long as we remain above them, these can be ugly pullbacks because of a lot of people rallying it up and shaking out a lot of retail, but the bullish thesis for mid-year rally is still intact as long as we remain above these levels. Now, even though the crypto space is looking a little ugly, let me point out a couple other things that kind of give me a little bit of a bullish bias. So this is Tesla. With Tesla over the weekend, I drew up 2 path projections, right? It was the yellow path, where we just pull back to 61%, or there would be this red path, where we have an ABC correction and go all the way back down to the second buy zone. Well, lo and behold, that's exactly what happened, right? I didn't change any of these anywhere. This is literally how it played out. So we have an ABC, ABC, and then ABC. Now, the delivery numbers were bad, but they were expected to be bad because one of their gigafactories were shut down for like 2 months. So I don't know if this is actually as bearish as you would think, but the thing that I see here is I do see a 5-wave count, right? So I did see a 5-wave, and the question is, do we hold this low of 158? I did a video on Tesla, and I mentioned because this is also something to note is descending support was also caught right here, which is what marked the bottom previously. But I did a video on Tesla, and I said, if we get a daily close under 158, we're essentially under 95% of all shares traded from the pivot low of $100 all the way up to the pivot high of $300. If we start printing below that and prices accepting below that, I don't think there's a technical bottom for Tesla. It's going to only get better when interest rates are cut so that people buy more electric vehicles. So I give a lot of importance to this key level of 158. And I did this video before any of this price action happened. And when this happened, we not only hit 160-ish, we hit descending support here. Then we got 5 waves up. And uh, with the 5 waves up, we have to look at this and see what's going on here. Now, something also to note is this wave C is typically the same length as wave A, and you can do this through a Fibs extension. And if you see, we actually bottomed not only in the demand zone, but at the 261 of wave A. So that's kind of bullish to me. Even though that's bullish to me, we really need to try to recover all of this. But the current price action, in my opinion, now this could sell off into the close, but the current price action is bullish to me. Let me show you why I think that. On the RSI, we have another wedging RSI. I think whichever way it picks is going to tell us the true direction of Tesla. And then this is the one I like the most, the ADL line. What is this? There we go. All right, so with this ADL line, it's essentially proved every bottom of Tesla. And each one of these red rectangles have shown sideways accumulation while the prices went down, which then led to a massive rally. And let me just show you this. All right, so if we look at this price action right here, we hit a high of 217 and we dropped all the way down to a low of 150. This entire time, there was sideways accumulation of shares. And that's what this shows us. The ADL line, the accumulation distribution line, this shows secretly what Wall Street's doing. So even though the price was going down, they were maintaining shares. They were buying, right? And I think that was a huge sign. What happened when we finally broke above this sideways consolidation? It was the beginning of the next rally, right? Then what do we have here? We have a high of 300 and a low of 160. What has been happening the entire time? Sideways consolidation. Not only have we been having, sideways consolidation, but it's been trending upward while the price has been trending downward, to the point where we've now reached a wedge as well, ADL line. Let's look at these last supports of the ADL line. The last time I hit here, marked the bottom of this move for this rally. How much did we rally? 35%. What about this one? When this hit, is this bottom? And it hit 19% off this one. This one, which was just a couple days ago, to be honest, hit 160 to a high of 184, which was a 15% rally. And we're getting so close to this wedge that I think the move's going to be explosive. It's just which way is it going to be? I kind of have a bullish bias, because even though we're getting lower and lower and lower, the accumulation is going higher and higher and higher. And with that being said, with it going higher and higher and higher, we have this demand zone currently being respected. And even though the price gapped down 6%, the opening price was 164. As long as we close above that, this is a bullish divergence. What they did was they dropped the price on a low amount of shares, and then they bought up all those shares at a discounted price, which shows right here, right? This is the concept of what this ADL line is, right? So the price up here, when it closed at 175.79, right here, was lower than the current price of 166. So they've gotten more shares. They've bought more shares than when the price was at 175. This doesn't look like distribution. And until that happens, I think that this is going to hold, which gives me a really strong bullish bias. I'll have to update the count, but I think the combination of all of this is going to resolve fairly soon. What way? I don't know. The realistically, the crypto charts are looking a little ugly, but I'm just trying to see what's under the hood, right? I'm trying to not look at the charts. I'm trying to look at stuff like this, because this gives us a better sign and signal of what's probably going to come. Now let's look at China. China's doing the same thing. It's showing relative strength. I can show you that this crescent moon on the ADL has marked the bottom of every time it tapped, marked the bottom of BABA, right? Every time it tapped the edge of the crescent, it marked the bottom of BABA. Now, typically when a crescent happens, this is the downtrend, and when it crosses and it starts riding up the crescent, that's when the uptrend starts in BABA. Where are we at? We're currently in an ADL demand, making higher highs. What's happening right now? There is a head and shoulders forming on Alibaba, you know, and all of these daily candles are bullish in my opinion, right? Like the price closed up here, then this morning it gapped down and then they bought the shares up, which causes the ADL line to go higher. See? And as long as stuff like this happens, this is bullish. This is them just stealing a little bit more shares one at a time, you know, one day at a time. We can do the same thing with like NEO, you know, we have descending support here. NEO just keeps gapping down and it just keeps stealing shares. It's in this massive buy zone. And now we're starting to curl up right here. This is descending support into the buy zone. That's all the way back from September 2023. Out of the last 4 days, this is a bullish candle, this is a bullish candle, and this is a bullish candle. So 3 of the 4 candles, 75% bullish candles in the buy zone. And now the trend's starting to go upward, right? This started the day at a low of this, and we've already recovered 3.5%. XBEV starting to curl as well into the buy zone. Keeps gapping down. Like all of these gap downs, this is them just stealing shares, right? Like one green candle, and they will surpass all of these shares that they sold in one daily candle. And then all of a sudden, even though the price was, you know, $10.50, 40% away, they'll have more shares by the time they reach $9 than all of this. That's just straight manipulation. Same thing with Luckin. You know, Luckin, this crescent moon, was able to identify as soon as we got onto the backside of it, all of the tops of Luckin, and just kept selling the trend until we hit the bottom of it. What happened? And this is when I called Luckin's bottom at $20, you know, 1930. I literally made a tweet this day and said Luckin bottomed. What happened since? We've went straight in an uptrend from, you know, 1930 with a high of $26 for the 35% move already. We've broken out of this downtrend of this crescent, back tested it, and now we're making higher highs. This is bullish, right? If you look at this, you know, even the shares right here, the price was higher, the accumulation was lower. Now the price is lower, the accumulation is higher. They're accumulating shares. Luckin's bottom is in. They're about to rally this motherfucker hard. This is one of my biggest positions, by the way. But to me, Reed looks really strong. China looks really strong. I think it's possible Tesla's bottomed. As long as we hold that 158, and we're pretty close to it, so the risk isn't too far away. I think those are all showing a lot of strength. And even though crypto's looking very scary, we have to just go off the technicals and be nimble. You know, don't buy at the top, don't oversize at the top, and just be patient and trim when we need to, and then just wait out the charts and see what happens. If they get validated, they get validated. You know, it's the idea of even if we took some risk here and we lose 20% of our portfolio, then we'll just go all cash. We'll wait it out. We'll wait till the end of the rally or the end of the downturn. In the second half of the year, I'll identify the bottoms. We'll start buying shares back in, and then we'll make 200, 300, 500% over the next 2 years. It's just which route is it going? And until then, we can't be arrogant. We need to find confirmations. We need to find the bullish confirmation, and we need to stay nimble until the bearish thesis is in play, right? So here's a few videos or a few charts to look at. Try to look at this shit on a desktop, or I hope you looked at this on a desktop. If not, then it's going to be hard to see any of this and make sense of any of it. But yeah, cheers.